last decade, investors have become obsessed with the concept of a unicorn, a project, a company that fetches $1 billion valuation. No company has been more associated with that, frankly, than Uber. Uber is really one of the three big high profile unicorns, Airbnb, WeWork being the other two. So, in this episode of Brave New World on Context TV, we're going to look at just how dramatically, in 1 year, the fate and fortune of Airbnb, Uber, and WeWork has changed. Last year in 2019, WeWork had its shit show year. The company's business model came under scrutiny. The company's co-founders came under scrutiny. Its culture was heavily criticized. And frankly, if you really just take a step back and you kind of lose a little bit of the hype and the veneer, you kind of realize that WeWork was in no shape, form, or fashion a $50 billion value business. It was basically a real estate company trying to parlay itself and position itself as a tech company to chase the higher valuations. Obviously SoftBank, their main investor, and ultimately who will own WeWork when this is all said and done, SoftBank kind of stepped in, injected a bit more capital, and basically had no choice but to go double or nothing. Airbnb, frankly, was arguably the best positioned of the three last year, if you think about it. Airbnb was, they could see profitability, and they could, obviously pour a little bit more money into marketing, but at its core, they had a business model that made sense. People love to travel. They were making acquisitions that were smart to get into other related segments, whether it was luxury retreats or hotel tonight. These were acquisitions and targets that basically would just allow Airbnb to get more and more market share. And they seemed to be unstoppable. They had a paper valuation of $31 billion. And for all intents and purposes, things were going so well that they pushed off the IPO in 2019 to really try to, break through and go for a public offering in 2020. Uber, meanwhile, they had a couple of years again that the culture was questioned, their leadership was questioned, the founder was asked to leave, and they brought in, new leadership. And Uber, while its model was not quite as schlocky as WeWork's, was also questioned. It was basically an economic model where, Yogi Berra would be proud, where you lost a ton of money, but you kind of made up for it on volume, which made no sense. But fundamentally, and this hit me a couple of years ago when I went to not just China, but when I went to Portugal, and then when I was in Russia, and I was in Mexico over the span of a few weeks. And I was kind of blown away with just how ubiquitous throughout all my travel Uber had become. It was literally, when you're in China, Google's not available. When you're in different countries, things are, kind of like every local, there's a local flair to everything that you do. But it seemed like the one constant was Uber. And I was like, well, you know what? Maybe Uber is going to get the last laugh. Maybe in the end, this massive investment that they've done has given them this first mover advantage where they're just going to scale so quickly that they'll get the last laugh. So that was like how the three were positioned. But when Uber then filed for IPO, the public markets were not that impressed, and its stock sank. And there's a high likelihood that the company was never going to be the big $100 billion enterprise that investors originally hoped. How quickly things change. With the COVID pandemic, the reality is there's really, of those three, one company remains standing. I would say in this new world order, in this NWO, Uber is clearly the most valuable, not necessarily from a valuation perspective, but just in terms of service and value and its role in society. Because the world has changed. The concept of deliveries and the concept of physical distancing and everything that we're going to be re-questioning, the systems and the assets that Uber has created are far and away the most promising amongst the three. I would say WeWork is probably DOA. It's more of a dead on arrival because for the time being, nobody will actually be going into a WeWork to work with physical distancing. That makes no sense. And ultimately, WeWork is caught between a rock and a hard place. Financially, they're the ones that are the most, the most screwed, so to speak, because they need people to use their facilities to bring in revenues because they still have massive outlays in terms of these rents that they've committed to, which even before the SoftBank taking over shit show last year put them in a very vulnerable position. So they're kind of, I feel this is the year where they may have to file for some kind of bankruptcy protection. I just don't see the numbers making sense for them in the near term. Doesn't mean that post-pandemic people would not use short-term office space, but I don't think that they could bridge themselves to there. And then the one that I would say is TBD, to be determined, is Airbnb, ironically. Airbnb, granted, they got money in the bank. I think near term, they're also going to be squeezed. A couple of weeks ago, there was an article about how Ron Conway, one of the premier angel investors, who obviously was one of the earlier investors in Airbnb, he was whispering to CNBC that investors were calling and they were lining up to invest, which was kind of like bullshit, probably. If anything, it's like the vultures and the sharks circling a company that in the near term has very little revenue coming through. But in the near term, they also have an extremely high outlay of capital because they got a refund, not just consumers who have booked on Airbnb and can't travel, but they also probably realized before long that they also had to give some kind of cushion to all of the different apartments and listings and houses that are added to the platform. And that's where I think Airbnb, were it not for its balance sheet, would also probably, like WeWork, be in financial trouble. But if you are looking at a 6-month runway, probably business as usual, and this will be a blip that it can overcome. I think with most travel CEOs coming out and saying that they're not looking at travel to get back to anywhere near pre-COVID levels, forget even setting new peaks, and they're talking about a 2021, and some chains even talking about 2022, I think that's where Airbnb also will find itself in trouble. They've already voluntarily reduced their valuation by about 15%. I don't think that's enough. I think this is a company that is probably, it's arbitrary when you're talking about private company valuations. I think their current valuation is a fraction of what they think it is because there's still a lot more uncertainty. We're not even in a period where you're talking about recovery and a path to get back to where you were. You're still very far off from that. And then the last thing, which is an externality of COVID's impact on Airbnb, there's a lot of housing locally that was taken off the market because a lot of individuals would buy up a lot of properties, usually through mortgages, and then list them on Airbnb, and that would kind of hold back supply of housing for local residents. So I think what this will do is it might actually set off a chain reaction where you're going to see the residential real estate market tumble as a result because in many cities, you're seeing all the construction boom. It's not just the immigrants, it's not just kids leaving their families and needing apartments or people moving from rural areas to urban areas. I think some of that was definitely propped up by Airbnb's booming growth. So if you had to kind of in 1 year, Airbnb, which was like the leader of that pack, followed by Uber and then kind of WeWork, I think Airbnb's been set back dramatically. And while Uber's model still economically needs to be fine-tuned, there's no doubt that of those three companies, Uber finds itself in the driver's seat.